Question 1. Which of the following is a key distinction between short-term and long-term disability insurance policies? A short-term disability insurance typically provides coverage for a period of up to 12 months, whereas long-term disability insurance can extend indefinitely. B. Short-term disability insurance covers all types of disabilities, whereas long-term disability insurance only covers permanent disabilities. C. Long-term disability insurance generally has a shorter elimination period compared to short-term disability insurance. D. Short-term disability insurance usually pays out larger monthly benefits compared to long-term disability insurance. Answer: A. Short-term disability insurance typically provides coverage for a period of up to 12 months, whereas long-term disability insurance can extend indefinitely. Explanation: Short-term disability insurance provides temporary coverage for disabilities that last a short duration, typically ranging from a few weeks to 12 months. In contrast, long-term disability insurance is designed to cover longer-term disabilities, often providing benefits for several years or until the insured reaches retirement age, depending on the terms of the policy. The elimination period, waiting period before benefits are paid, tends to be shorter for short-term disability insurance compared to long-term policies. Thus, the key distinction lies in the duration of coverage, with short-term policies offering temporary protection and long-term policies extending coverage for extended periods. Question 2. Sarah has been disabled due to a back injury that prevents her from performing her job. However, she is able to perform light office duties. Based on her insurance policy, which of the following is most likely to apply? A. Sarah qualifies for full disability benefits under the any occupation definition. B. Sarah qualifies for partial disability benefits under the own occupation definition. C. Sarah is not eligible for any benefits as she can perform some work duties. D. Sarah qualifies for disability benefits only if she can perform light office duties for more than 6 months. Answer: B. Sarah qualifies for partial disability benefits under the own occupation definition. Explanation: The own occupation definition of disability insurance provides benefits if the insured cannot perform the duties of their specific occupation, even if they are able to work in a different capacity. In Sarah's case, her back injury prevents her from performing her regular job but does not preclude her from working in a light office job, which qualifies her for partial disability benefits. If the policy uses the any occupation definition, benefits would only be paid if she could not perform any job at all. Since Sarah's policy likely includes partial disability coverage, she would receive a portion of the benefits due to her inability to work full-time in her usual role. Question 3. Mr. Anderson, a small business owner in Oregon, is applying for disability insurance coverage for himself. He is self-employed and does not have access to employer-provided disability insurance. Which of the following best describes his situation in Oregon's disability insurance landscape? A. Mr. Anderson is eligible for the state's Paid Family and Medical Leave Insurance (PFF) program as he is self-employed. B. Mr. Anderson must apply for private disability insurance from an insurance company as the state's PFF program does not cover self-employed individuals. C. Mr. Anderson is required by law to have disability insurance coverage through the Oregon state program even though he is self-employed. D. Mr. Anderson can access public disability benefits in Oregon, but only if he is permanently disabled. Answer: B. Mr. Anderson must apply for private disability insurance from an insurance company as the state's PFI program does not cover self-employed individuals. Explanation: Oregon's Paid Family and Medical Leave Insurance (PFF) program provides paid leave benefits for employees who need time off for personal or family health reasons, but it does not cover self-employed individuals. As small business owner, Mr. Anderson will need to seek private disability insurance coverage. Self-employed individuals in Oregon are responsible for obtaining their own disability insurance as they are not eligible for public benefits under the PFI program. The state does offer support to employees of businesses, but does not mandate coverage for self-employed workers, thus requiring them to pursue private insurance solutions for disability protection. Question 4. Which of the following would most likely be considered an exclusion under a typical disability insurance policy? A. Disability resulting from an accident that occurred while traveling abroad for business. B. Disability resulting from a pre-existing condition that was disclosed during the underwriting process. C. Disability resulting from a medical condition that existed before the policy was purchased but was not disclosed to the insurer. D. Disability resulting from a car accident that occurred while driving to work. Answer: C. Disability resulting from A medical condition that existed before the policy was purchased but was not disclosed to the insurer. Explanation: exclusions in disability insurance policies often include disabilities caused by pre-existing conditions, particularly when the insured did not disclose the condition during the underwriting process. If the insurer was not made aware of the condition, the claim may be denied based on the non-disclosure clause. This is to protect insurers from providing coverage for conditions that were known before the policy was issued. Other conditions, like accidents, typically fall within coverage as long as they are not caused by actions that specifically fall within exclusions, e.g., criminal activity. Question 5. When determining the benefit amount for disability insurance, which of the following is the most important factor? A. The insured's age and health history. B. The total assets owned by the insured. C. The insured's pre-disability income and occupation. D. The number of dependents the insured has. Answer: C. The insured's pre-disability income and occupation. Explanation: the benefit amount in disability insurance policy is primarily based on the insured's pre-disability income and occupation. Insurance companies typically use percentage of the insured's income, usually between 50–70%, to calculate the monthly benefit. The insured's occupation also influences the underwriting process, as jobs with higher risk factors may lead to higher premiums or lower benefit levels. Factors like age and health history are considered during underwriting but do not directly influence the benefit amount in the same way income and occupation do. Question 6. Mr. Davis has a disability insurance policy that has an elimination period of 30 days. After being diagnosed with a severe injury, Mr. Davis is unable to work for 20 days. What happens to his benefits? A. Mr. Davis will start receiving disability benefits immediately as his injury qualifies for coverage. B. Mr. Davis will not receive benefits because the elimination period was not met. C. Mr. Davis will receive partial benefits for the 20 days he was unable to work. D. Mr. Davis will receive full benefits after 30 days of disability even if he was unable to work for only 20 days. Answer: B. Mr. Davis will not receive benefits because the elimination period was not met. Explanation: the elimination period in a disability insurance policy is the waiting period that must be satisfied before the insured can begin receiving benefits. In Mr. Davis's case, the elimination period is 30 days, and since he only experienced 20 days of disability, he does not meet the requirement for benefits to begin. Disability benefits would only be payable after the full 30-day elimination period is completed. This policy provision ensures that short-term illnesses or injuries do not trigger unnecessary claims for minor disruptions to the insured's ability to work. Question 7. Which of the following statements regarding a bone occupation and any occupation definitions of disability is true? A. Bone occupation provides benefits if the insured cannot perform their usual job, while any occupation provides benefits only if the insured cannot work any job. B. Any occupation provides broader coverage than bone occupation since it considers the ability to work any job, not just the specific job. C. Bone occupation is typically used in long-term disability policies, whereas any occupation is used in short-term policies. D. Any occupation is a more lenient standard than bone occupation, as it offers benefits even if the insured can work a different job. Answer A. Bone occupation provides benefits if the insured cannot perform their usual job, while any occupation provides benefits only if the insured cannot work any job. Explanation: the bone occupation definition of disability insurance provides benefits if the insured is unable to perform the essential duties of their specific job. In contrast, the any occupation definition is more restrictive, offering benefits only if the insured cannot work in any occupation for which they are reasonably qualified based on education, experience, and training. This makes the bone occupation definition more favorable for individuals whose disabilities prevent them from performing their specific work but may still allow them to work in a different role. Question 8. Mr. Wilson is seeking to file a disability claim due to a medical condition that was not pre-existing but was diagnosed after he started his policy. He is required to submit medical documentation to support his claim. What type of medical documentation is most commonly required? A. A letter from the insured's family physician confirming the disability. B. Detailed medical report from specialist outlining the diagnosis and treatment plan. C. Statement from the insured's employer confirming the inability to work. D. Signed affidavit from coworker confirming the disability. Answer: B. A detailed medical report from a specialist outlining the diagnosis and treatment plan. Explanation. When filing a disability claim, insurers typically require detailed medical documentation from a treating physician or specialist to verify the diagnosis and the severity of the condition. This documentation helps the insurer assess the legitimacy of the claim and the insured's eligibility for benefits. Letter from family physician may not provide the level of detail needed, and statements from employers or coworkers are not sufficient to substantiate medical claims. Detailed reports from medical professionals specializing in the disability are key to supporting the claim. Question 9. In Oregon, what is the primary responsibility of an employer offering disability insurance benefits to employees? A. The employer must pay the entire premium for employee disability insurance. B. The employer must ensure that the insurance covers all employees, regardless of job duties. C. The employer must provide disability insurance options but can choose whether to pay the premium. D. The employer must only offer coverage for employees who work more than 30 hours per week. Answer. C. The employer must provide disability insurance options but can choose whether to pay the premium. Explanation. Under Oregon law, employers are required to offer disability insurance options to employees, particularly for short-term or long-term disability coverage. However, the employer is not required to pay the full premium. Employers have the option to provide this coverage as part of employee benefits packages, and the employee can often choose to contribute to the premium. The obligation is to offer the coverage, not to fully fund it, which gives flexibility in structuring employee benefits. Question 10. When evaluating a disability insurance claim, which of the following would most likely result in a claim denial? A. The claimant did not provide evidence of a pre-existing condition when applying for coverage. B. The claimant failed to submit timely documentation from medical professionals. C. The claimant continued working part-time during the waiting period and was not yet disabled. D. The claimant's condition was not caused by an accident but was covered under the policy. Answer. B. The claimant failed to submit timely documentation from medical professionals. Explanation. One of the most common reasons for disability claim denials is the failure to submit the required medical documentation in a timely manner. Insurance companies rely on this documentation to verify the claim and assess its legitimacy. If a claimant fails to provide medical reports, test results, or physician statements within the required time frame, the insurer may deny the claim. Other factors, such as pre-existing conditions or ongoing work, may complicate claims but are not typically as immediately disqualifying as the lack of essential documentation. Question 11. Which of the following is true about the taxability of disability insurance benefits? A. Benefits from a policy where the premiums were paid by the employer are always tax-free. B. Benefits from a policy where the premiums were paid by the employer are always taxable. C. Benefits from a policy where the premiums were paid by the employer may be taxable to the employee. D. Disability benefits are always taxable regardless of who paid the premiums. Answer. C. Benefits from a policy where the premiums were paid by the employer may be taxable to the employee. Explanation. If an employer pays the premiums for a disability insurance policy, the benefits are typically taxable to the employee. On the other hand, if the employee pays the premiums with after-tax dollars, the benefits are usually tax-free. The taxability of disability benefits depends on who pays the premiums and whether the premiums were paid pre-tax or after-tax. Question 12. Which of the following would not be typically covered under a disability insurance policy? A. Injury from a car accident while commuting to work. B. Disability resulting from a mental health disorder. C. Injury sustained during an illegal activity or act of gross negligence. D. Disability due to a common cold or flu. Answer. D. Disability due to a common cold or flu. Explanation. Disability insurance typically does not cover short-term illnesses like the common cold or flu unless they result in a serious prolonged condition that incapacitates the insured for an extended period of time. Insurance policies are designed to cover more serious disabilities that prevent an individual from performing their regular duties for an extended period, but routine illnesses are generally excluded. Question 13. An insured's disability insurance policy has benefit period of 5 years and an elimination period of 90 days. Which of the following best describes how this would function? A. Benefits will be paid for up to 90 days and then coverage ends. B. The insured will need to wait 90 days before benefits are paid and the benefits will last for up to 5 years. C. Benefits are paid immediately but will only last for 90 days. D. Coverage will end after the insured has worked for 5 years. Answer. B. The insured will need to wait 90 days before benefits are paid, and the benefits will last for up to 5 years. Explanation: the elimination period, also called the waiting period, is the time the insured must wait after becoming disabled before they are eligible to receive benefits. In this case, the insured will have to wait 90 days before receiving any payments. Once the elimination period is satisfied, the insured will continue to receive benefits for up to 5 years, as specified by the benefit period. Question 14. Which of the following would most likely require the insured to purchase a rider to have coverage under a disability insurance policy? A. Temporary disabilities resulting from an accidental injury. B. Disability resulting from pregnancy or childbirth. C. Disability resulting from a long-term chronic illness. D. Disabilities caused by a car accident on the way to work. Answer: B. Disability resulting from pregnancy or childbirth. Explanation: most standard disability insurance policies do not cover disabilities related to pregnancy or childbirth unless the insured purchases a specific rider. These riders are usually added to the policy for individuals who want to insure coverage for these situations. Riders can extend coverage to conditions or situations that are excluded from standard policies. Question 15. Which of the following would be considered a residual disability under most disability insurance policies? A. The insured cannot work at all due to a disability. B. The insured can work full-time but is unable to perform specific tasks due to a disability. C. The insured can only work part-time due to a disability but experiences a reduction in income. D. The insured's disability does not prevent them from working at all. Answer: C. The insured can only work part-time due to a disability but experiences a reduction in income. Explanation: a residual disability refers to a situation where the insured is still able to work but is only able to work part-time or a reduced capacity due to their disability. This often results in a reduction in income, and the insured may be eligible for partial disability benefits to compensate for the lost income. Policies that cover residual disabilities typically pay a portion of the full benefit based on the income lost. Question 16. Which of the following is an example of an own occupation disability insurance policy? A. A policy that covers disabilities that prevent the insured from working in any occupation for which they are qualified. B. A policy that covers disabilities that prevent the insured from performing their regular job duties. C. A policy that only covers physical injuries resulting from accidents. D. A policy that requires the insured to be permanently unable to work in any capacity. Answer: B. A policy that covers disabilities that prevent the insured from performing their regular job duties. Explanation: own occupation disability policy provides benefits if the insured is unable to perform the duties of their specific occupation, even if they can work in a different job. This type of policy is more beneficial for professionals whose disabilities prevent them from performing their specialized work, such as doctors, lawyers, or other skilled professionals. Question 17. Which of the following would be an example of a cumulative injury in the context of disability insurance? A. A car accident that causes immediate and severe injury. B. A condition that worsens over time due to repetitive physical activities, such as carpal tunnel syndrome. C. A mental health disorder that suddenly incapacitates the individual. D. A broken bone that occurs due to an unexpected fall. Answer: B. A condition that worsens over time due to repetitive physical activities such as carpal tunnel syndrome. Explanation: cumulative injuries develop over time due to repeated stress or strain on the body, leading to long-term conditions like carpal tunnel syndrome, tendonitis, or back pain. These types of injuries can result in disability as the condition worsens and ultimately prevents the individual from performing their work tasks. Question 18. If a disability insurance policy includes a rehabilitation benefit, what does this typically cover? A. It provides coverage for rehabilitation costs, such as therapy and medical treatment, to help the insured recover and return to work. B. It pays additional benefits if the insured is unable to return to work after a disability. C. It provides coverage for rehabilitation services for family members of the insured. D. It covers the cost of retraining the insured for a different career if they cannot return to their original job. Answer: A. It provides coverage for rehabilitation costs, such as therapy and medical treatment, to help the insured recover and return to work. Explanation: a rehabilitation benefit in a disability insurance policy is designed to cover the cost of services that help the insured recover and return to work. This may include physical therapy, vocational training, and other forms of treatment or assistance that can aid in recovery. It is aimed at helping the insured regain their previous functionality and ability to return to their occupation. Question 19. What is the primary difference between a short-term and a long-term disability insurance policy? A. Short-term policies typically cover less than 3 months, while long-term policies provide coverage for several years or until retirement age. B. Short-term policies cover a broader range of disabilities, while long-term policies only cover severe injuries. C. Short-term disability benefits usually begin after a longer waiting period than long-term disability policies. D. Short-term policies are generally more expensive than long-term policies due to the coverage duration. Answer: A. Short-term policies typically cover less than 3 months, while long-term policies provide coverage for several years or until retirement age. Explanation: Short-term disability insurance typically covers temporary disabilities and provides benefits for a few weeks or up to a few months, generally no more than 3 to 6 months. Long-term disability insurance, on the other hand, is designed for more serious conditions and can provide coverage for several years or until the insured reaches retirement age, depending on the policy terms. The waiting period for short-term policies is usually shorter than for long-term policies. Question 20. Which of the following is true about the exclusion period in disability insurance policy? A. The exclusion period is the time during which benefits are paid for the insured's disability. B. The exclusion period is the period during which certain types of claims are not covered, such as for pre-existing conditions. C. The exclusion period is the waiting time before policy takes effect. D. The exclusion period is the time that the insured must work before becoming eligible for benefits. Answer: B. The exclusion period is the period during which certain types of claims are not covered, such as for pre-existing conditions. Explanation: The exclusion period refers to a time frame in which specific conditions or events are not covered by the policy. For example, if a disability insurance policy has an exclusion for pre-existing conditions, any disability resulting from a pre-existing condition that was not disclosed during underwriting would not be covered during the exclusion period. It is a way for insurers to manage risk. Question 21. Which of the following is true regarding the coverage of pre-existing conditions in disability insurance policies? A. Pre-existing conditions are always covered under disability insurance policies. B. Pre-existing conditions are never covered under disability insurance policies. C. Pre-existing conditions are typically covered after a waiting period. D. Pre-existing conditions are only covered if they are disclosed during underwriting. Answer: C. Pre-existing conditions are typically covered after a waiting period. Explanation: Most disability insurance policies include a waiting period for coverage of pre-existing conditions. If an insured person has a medical condition that exists before the policy begins, the insurance company may exclude coverage for that condition for a certain period, usually 12 to 24 months. After this period, coverage for the condition may be provided. Question 22. What does a cost of living adjustment (COLA) rider in a disability insurance policy provide? A. It increases the benefit amount based on the insured's income level. B. It adjusts the benefit amount periodically to keep pace with inflation. C. It ensures that the insured can receive benefits for a longer period. D. It lowers the premium amount after a certain number of years. Answer: B. It adjusts the benefit amount periodically to keep pace with inflation. Explanation: A cost of living adjustment (COLA) rider increases the benefit amount over time to help maintain the purchasing power of the insured's disability benefits as inflation rises. The increase is usually tied to an inflation index, ensuring that the benefits keep pace with the cost of living. Question 23. Which of the following best describes an income replacement disability insurance policy? A. It provides benefits that equal the insured's total salary during disability. B. It replaces the insured's income up to fixed monthly benefit, often percentage of the salary. C. It provides one-time lump sum payment to cover lost wages. D. It covers only medical expenses related to the disability. Answer: B. It replaces the insured's income up to a fixed monthly benefit, often a percentage of the salary. Explanation: An income replacement disability insurance policy provides a monthly benefit to the insured, typically a percentage, often 60% to 80% of their pre-disability income. This policy helps replace lost wages when the insured is unable to work due to a disability, providing financial stability during the recovery period. Question 24. Which of the following would typically be excluded under most disability insurance policies? A. Temporary disability caused by a broken leg. B. Disability resulting from self-inflicted injuries. C. Disability due to a car accident. D. Disability resulting from an on-the-job injury covered by workers' compensation. Answer: B. Disability resulting from self-inflicted injuries. Explanation: most disability insurance policies exclude coverage for injuries or disabilities resulting from intentional self-inflicted harm. This includes suicides, attempted suicides, or any injury intentionally caused by the insured. These exclusions are in place to prevent fraud and misuse of the policy. Question 25. Which of the following best describes a group disability insurance policy? A. It provides coverage for individuals, usually based on their medical history. B. It is offered to a group of employees as part of a benefits package. C. It covers all disabilities, regardless of the cause. D. It is only available to self-employed individuals. Answer: B. It is offered to a group of employees as part of a benefits package. Explanation: a group disability insurance policy is typically provided by an employer as part of an employee benefits package. This type of policy covers a group of individuals, usually employees, and often has lower premiums than individual policies because the risk is spread across a larger pool. The coverage is often limited in scope compared to individual policies. Question 26. Which of the following is a common limitation of short-term disability insurance? A. Coverage is often available only for employees working full-time. B. Coverage typically only extends for a few months, often up to 6 months. C. Coverage is unlimited and continues until the employee recovers. D. The premiums are higher than those for long-term disability insurance. Answer: B. Coverage typically only extends for a few months, often up to 6 months. Explanation: short-term disability insurance typically provides coverage for temporary disabilities, often lasting for 3 to 6 months. This type of policy is designed to provide financial support while the insured recovers from an injury or illness that does not require long-term care. After this period, long-term disability insurance may kick in if available. Question 27. Which of the following factors can influence the cost of a disability insurance policy? A. The insured's age and health status. B. The insured's family size. C. The occupation of the insured. D. Both and C. Answer: D. Both and C. Explanation: the cost of disability insurance is influenced by factors such as the insured's age, health, and occupation. Younger and healthier individuals typically pay lower premiums as they present less risk to the insurer. The occupation also plays a role, with higher-risk jobs, e.g. construction workers, leading to higher premiums. Question 20. In the context of disability insurance, what does the term elimination period refer to? A. The period between when a claim is filed and when the first benefit payment is made. B. The time during which a disability must last before benefits are payable. C. The time it takes for the insured to recover fully. D. The period when the policy is considered inactive after a claim. Answer: B. The time during which a disability must last before benefits are payable. Explanation: the elimination period is the waiting period between the onset of a disability and the time when disability benefits begin to be paid. This period typically ranges from a few weeks to several months, depending on the policy terms. The longer the elimination period, the lower the premiums. Question 29. Which of the following is true about disability insurance policies with a waiver of premium rider? A. It waives the premium payments if the insured becomes disabled. B. It guarantees that premiums will never increase. C. It pays the premium for the insured spouse and dependents. D. It cancels the policy if the insured becomes disabled. Answer: A. It waives the premium payments if the insured becomes disabled. Explanation: a waiver of premium rider ensures that if the insured becomes disabled, they are not required to pay premiums while receiving disability benefits. This rider provides financial relief by keeping the policy in force during the disability period without the insured having to pay the regular premiums. Question 30. Which of the following best describes a supplemental disability insurance policy? A. It is purchased in addition to a primary disability policy to increase coverage. B. It covers only part-time workers who are not eligible for other benefits. C. It provides coverage for temporary short-term injuries not covered by a primary policy. D. It is an employer-paid policy that covers all employees at a low premium. Answer A. It is purchased in addition to a primary disability policy to increase coverage. Explanation. A supplemental disability insurance policy is purchased to provide additional coverage to complement an existing primary disability insurance policy. These policies help bridge the gap by increasing the overall benefits or extending the duration of coverage. They are often used to ensure a higher level of financial protection if the primary policy does not provide enough coverage.